Okay, Alan, we are live. Okay, welcome everybody to Wall Street Reporter's next super stock. This is the company Spotlight slash, we call this the CEO live chat. We have ImagineAR, Alan Paul Silverstein. Alan, welcome back.
Absolutely. We did promise we'd come back, and here we are, and we actually had a big announcement yesterday. So we do have news for today's special live session, which I've never done before. So thanks for having me on. This is the first live one we've ever done.
Excellent, excellent. So yeah, we got a lot of people here in the live audience. So this is going to be very exciting. So the stock has really been on a tear for the last couple of weeks. We had a huge spike. The stock basically tripled in a couple of days, and it dropped by 50%. It's been a bit of a roller coaster.
Oh, it's a roller coaster, all right, for sure. The volume, Jack, has been absolutely unbelievable. I mean, yesterday on a slow day is 3 million. We've had days where I think it was almost a month ago, we did 35 million in a day. I don't know how many stocks have this kind of volume for such a tiny little company that just goes, but certainly it's exciting. It's glad to see a lot of eyes are on us. We're getting a lot of investor attention. We're getting some new opportunities that are coming through it. So it's actually worked out quite well for us as well.
No, definitely. And we have, there's definitely a lot of interest in the stock right now. And you've had, some important news announcements in the last couple of weeks. And I think what I'd like to do today really is kind of get you to kind of explain, what those announcements really mean for the company going forward. And then, I'm going to ask you a couple of questions, and then we're going to open up to live chat with the audience. We've got a lot of audience questions here, so we're going to go to those in just a little bit. Wow, we got a couple hundred people in the room here, so this will be very exciting.
And you did the orange for Valencia, so I was very impressed. You had the technical capability, Jack, to actually put up the Valencia colors as well.
Exactly.
I did wash the shirt. For anyone who saw the interview, we did wash it so we could put it on one more time. This will be the end of Valencia, but they shipped it over from Spain, a whole bunch of stuff for the deal, and we're really excited to be part of them. So do you want to go back to everything? Well, we did get their mascot. They sent it over, which we created, and they did send over the coffee mug, and we do have the jersey as well, which we showed yesterday. So they've been wonderful to work with, and we're already moving ahead in terms of our technical integration with our SDK.
Fantastic. So we got there's really been three important announcements, and I want you to kind of walk us through them and exactly explain what they mean, kind of for the company, because those things are key. Firstly, you had the NFL Alumni, you had the Wave Sports, and now you have Valencia. So what exactly? Maybe you can start with how will the Valencia deal work and what that means for the company.
That's a good question. So Valencia, we actually met when we did the World Football Summit. We actually signed up with GSIC, which is headquartered in Spain. It's Microsoft backed as well. And we competed. I think it was 100 different vendors. We made it to the final 16. But part of the reason we joined that organization is to expand globally in our footprint, being a Microsoft certified partner. So with that, once we joined, they introduced us to a number of the CIOs of the organizations. You've got La Liga, which is one of the biggest leagues out there with millions of fans around the world. Got in contact with Franco. Franco and myself spoke quite a number of times. We showed a demo. And with everything going on with the same experience there in terms of fan engagement requirements, COVID, he really wanted to integrate the SDK immediately and go global with it. I don't know if you saw the release, Jack. They have 7 million fans on social media around the world. It's enormous. So it's going to give us an opportunity to bring our AR around the globe, full SDK integrated with them. But they really want to start working on different projects as well with us in terms of sponsorship and other engagement. There is revenue tied to the deal. The revenue, that's one thing, again, also, Jack, we have these partnerships. Some, for example, when we did the Wave deal, that was a $250,000 USD deal, and that was announced revenue. In this case, this will be included in the quarterlies. When it comes to revenue, I think some of the investors also have to understand, we are a SaaS company. It's AR as a service. So the way revenue is recognized is different than maybe someone just selling a product, like in e-commerce, right? If you're e-commerce, you sell a product, you identify the revenue at that moment, and you recognize it on your P&L. With SaaS software companies such as ImagineAR, we can only recognize revenue as it is used on a monthly basis. So even if you do an annual contract, you pick a number, $1 million, $2 million, doesn't matter. You have to divide it by the amount of months of the year, and then you earn that revenue only on a monthly basis. So you have a lot of, for lack of a better word, revenue awaiting that is not going to be declared or stated until it is earned as it goes along. So SaaS companies, a perfect example of an enormously successful one is Salesforce. You're always going to start slow on the revenue side. In a sense, it's not going to be earned. As you continue, you start earning and building it. And we have an outside CPA firm that works directly with our CFO. We have an auditor. We follow the principles and rules of accounting directly. We are a pure play AR. We're not going out there selling other products. We're not taking other product revenue and putting it into our revenue. One of the examples, and we get calls from investors, and I'm offshooting from Valencia, but when revenue keeps coming up, it's, for example, we just took in a lot of, warrant money, right? So we have $4.5 million we raised, almost $5 million. We could go out there and purchase a company. For example, maybe we go out and we get masks. Masks are the in thing, right? Everyone's wearing a mask. When we buy a mask company that's selling $2 million a mask a year. And by the way, we activate the box. So when you point your AR at the box, automatically you'll get health tips and issues and everything else from the CDC. Well, what is that? Is that 2 million AR revenue? No, that's mask revenue. That's e-commerce. So it doesn't make sense to go out there and generate revenue for the pure sake of it. We are a pure play AR. We're focused on our model for the last 3 years. And as we continue, the value of the company will be in the tech and the platform. Valencia has looked at AR from companies both overseas as well in the US. They selected us. We've built something that's solid. We're going to continue to grow and build it, but stay focused in our model, which is different products leveraging mobile AR around the world for engagement for consumers and fans. And the revenue will come. We announce on quarterlies, but we're not going to go out there and just acquire, as a lot of investors bring up, just acquire to get revenue, because it's not AR revenue. If you had a company come shopping for you, right? For example, say a big company comes technical. And I did work previously with a group with a small private equity company that did acquisitions. When they look at your P&L and balance sheet, they're going to look and say, oh, you got $2 million of revenue? Well, the 2 million, if we did the math, that's product sales. And by the way, do you own the IP of that product? Do you own the intellectual? No. So where is the value in just having numbers to run? I believe ImagineAR as a pure play AR is going to have significant value as we continue to grow, close big accounts like Valencia. Valencia has agreed to not only work with us to build this out, but to introduce us to other teams in the leagues to be our premier account in Europe as we further expand around the globe. So Valencia is an exciting one. That's why, as we say, you'll see the revenue in the quarterlies. On the other side, the Wave deal is going to be a unique deal. It's going to be rolled out in the November timeframe. It is not a Wave labeled product. It's going to be a unique product we're extraordinarily excited by. It's going to be a new approach to AR nobody's ever done before, and a unique business model that's going to generate recurring revenue. And we're hoping and optimistic it's going to grow pretty quickly, both in North America and around the world too. So that covered the Wave one. And then the last one, because we got 30 minutes, so I'm keeping the speed first, Jack. The NFL Alumni was originally with the Academy. The Academy is up and running today. It's got, I think, 20-some players which were invited to be there. They're in their own bubble at the NFL Hall of Fame Village. They are at the stadium. And as a matter of fact, our signage is at the stadium as well with the NFL Alumni. It is being filmed as well for a docuseries as we speak. So we'll have some visibility of our AR activations in that as well. And that partnership with the NFL Alumni and starting with the Academy is a 5-year revenue share deal, a significant one. And people have read and contacted us. They now start to understand the implications that being next door with the Alumni, with the NFL Hall of Fame and the NFL Hall of Fame Village that wants to be the Disneyland of NFL is going to give us extraordinary opportunities to leverage the alumni, leverage AR, and get sponsorship and brand revenue opportunities for many years to come. So these are key foundational opportunities to really grow and build the business. And we are very, very optimistic there'll be more of these types of partnerships that will be coming as we continue through 2020.
Okay. And so, what I found interesting is like Valencia is they're, I guess in the US, people, they don't follow football or soccer, European sports, but, they're a major team, they have millions of fans. So, how likely is it that you're going to, sign up more teams in Europe now? with
I think, you know, they want to be our premier shop. They want to be the first team out there. They want to be the reference account. We'll be doing videos. We'll do case studies. Franco, who's the CIO, the president, was also quoted. They're extremely excited about AR. They've been looking for an engagement tool. And when you get the president of Valencia, you know, to quote in our press release and be part of this announcement, that's very, very supportive of an organization that large, that famous, and that well-known, and also highly respected in La Liga, in other soccer teams and leagues around the world. So we're excited. I think it's going to drive a lot of new opportunities for us overseas. And I think this is going to continue forward as we continue around the world, offering our SDK integration of ImagineAR.
Okay. I got a couple questions I'm going to ask, but I want to actually jump into some of the audience questions. We have some audience coming in. I want to ask you about the Apple, the Apple Glass announcement. That's, that's going to be interesting. Okay. So Jacob is asking, he's seeing multiple NFL team logos activating AR objects.
So what we're seeing is we've activated a lot of logos in demonstrations we've done. We have partner resellers, and you also have the capability to go to ImagineAR Studio and activate logos as well. So the NFL logo, the NFL alumni are a separate organization from the NFL teams. They operate into their own business environment. There's 36 or 37 chapters, which players are part of. But we're focused on initially the academy, which just launched. They want to be the minor league of the NFL between, D1 college and the NFL. They're going to keep taking in players. And then we're going to start building out and looking to work with the chapters, former players, a lot who we've grown up with and watched on Sundays and are quite famous, and work with them in their foundations. The NFL logos that you're seeing are from, prospects, demonstrations, or other conversations that have occurred. And we'll see what happens as we go forward as it relates. If people are looking for deals, that's a whole separate discussion. We're not going to go into it this time. Yes, we're developing new technology. As a matter of fact, in our last presentation with Jack, we reviewed the new Cloud 2.0 we're coming out, where we can create docs and separate instances for SDKs around the world in a very short period of time. So we're going to have that capability that's built in. We are upgrading ImagineAR app. We've actually backed it up a little bit. It's probably next week. It was going to be this week. But in this case, the app will allow some key features, including the ability to point the phone at an AR activation and then walk away and still have that activation on your phone, which no other AR company has done to date. And also the ability to have reward cards, our special opportunities to offer discounts, coupons, sign up for sweepstakes right on the screen as well as the AR activation occurs, and then tap on it to either go to a website to purchase, get the coupons, or get discounts as well.
Okay, Rick is asking a question.
I'm not answering that question, Rick. We can move on to the next question. Okay. What else would you like to discuss?
Here we go. We got ImagineAR, sort of like I guess that kind of ties in, right? What IL is asking. This kind of ties in.
I mean, this is something that's all occurring. Everyone keeps focusing on sports. We are expanding beyond sports as well. As a matter of fact, certainly music is one. Is, by the way, Jack, another one of your clients in the world of AR space. I guess they always say imitation is the most sincere form of flattery. An AR music app that looked exactly like the green screen that we did with the NBA Hall of Fame a year ago. And actually, we did the whole flow rider with the green screen back in May, which ended up getting huge reviews, really brought a tremendous amount of excitement. So, as I said, we have been in the mobile space. We're not going around, looking for different areas. We're focused. Like I said, it's kind of nice to see that other companies are copying what we do. We think we're a leader. We know we're a leader. Our technology is cloud-based. So we have a lot of unique patent technology around how we deliver those kind of music experiences. And you're going to see some major new announcements in live event engagement and entertainment coming up in the near future as well that we're very optimistic about too.
Okay. We've been asked this a couple of times. There's interest in the I guess telemedicine, the telemedicine space, and this question has come up. I mean, like you've answered, I think, before.
Right. So there's so much time in a day, and there's so many avenues you want to go out. Certainly, the ability from the platform we have allows you to address medical. It allows you to address pharmaceutical. It allows you to address car dealerships. We've spoken to a lot of industries, the real estate, malls for this Christmas, taking virtual Santa. We are not limited because it's a platform. Most other companies that do AR focus on building the AR activation into the handset. And that is a very different kind of technology. We write it in a program, it's in the handset, and then the capabilities, if you want to change them, have to upgrade the whole mobile app. We allow you to change the content, the experiences instantly from the cloud, anywhere in the world, in a matter of 1 to 2 minutes. There is not another platform that could do it. We're it. So yes, if medical came to us, certainly we did the deal with Pittsburgh, as you know, the MBA program that'll be rolling out in early 2021, working with them to do AR education, then doing a contest with local businesses. Again, they could be ending up doing different types of vertical markets, but we are not limited because we focused on platform with mobile engagement. When the AR glasses come out from Apple, LGE, InReal, other ones, and they develop a major following, we'll have the ability to support it with our cloud-based technology. And we are very much preparing already for Apple, and we've moved in that direction in expectation. That will be a big tipping point when it comes to AR engagement out in the world.
Okay. We got a couple questions like this one from Nizar about can you do something like this? I guess he's maybe talking about TikTok.
So he's looking at the consumer opportunity, and certainly when you start the business, you want to focus on B2B and then eventually go B2C, right? So that's where we're going. If you go to ImagineARstudio.com right now, anyone can go for free. You can upload your own video and deliver it to anyone's house or tie it to any visual marker. It works right now. You've got to put a lot of money into promotion and getting it out there. What we're doing, as I mentioned last time, Jack, is we have a full new digital marketing program with a full team up and running already. And the growth and retargeting to ImagineAR Studio and our website is growing exponentially. So we're going to run campaigns for consumers to do it. We did something for this past Mother's Day that's very similar, Nazar, to what you just mentioned, which was the first ever AR Mother's Day cards. With our partner down in Florida, we had the ability, Field of Flowers, where you went to their website, you ordered a bouquet, you videotaped yourself on your Apple or Android phone, and then uploaded it, and it was instantly delivered to the address of the individual. So when they opened up the bouquet, they got a QR code to download the app, and the video image of yourself, of the person, was like a 60-inch HD TV delivered right into the living room of the house. So yeah, we're going to get there. We're there now. It's a matter of putting money behind it. But that studio, ImagineARstudio.com, works today, and it most certainly can be taken advantage of by consumers. I just saw a flash on the screen, the patents. So on the patents, we do have 5 solid patents. Yes, we have secured and retained a law firm in the US, and we have discussed a number of strategic opportunities in terms of how best to monetize the patents as we go forward. We have 2 as well as we go forward that are currently being responded to between us and the PTO. And we're going to continue to do patent area work because we think there's significant value as this market explodes. Again, if you look at the independent studies that have come out, they're expecting today $4 billion to go to about $50 billion. So we're hoping that as that continues to grow, the monetization opportunities for patents is going to exponentially grow with that as well. And there have been some preliminary, tough word, I'm talking fast, is that other companies are starting to enforce their patents, and we're starting to see it out there. We want to see how that plays out. Our patents that we have are good, the ones we acquired, to 2032. So we most certainly have some tremendous runway to enforce the patents and continue going forward.
Interesting. Consumer brands.
So Jacob, on the loyalty program, absolutely 100%. I actually had a number of calls last week, even this week. The ability to tie AR scans to loyalty reward with the full API subroutines that built into the SDK, you could reward people points or other types of benefits as they scan. So that loyalty reward program is a key factor opportunity in the mobile. This is going to be really exciting as brands, consumers. You want to go to malls. They want people shop, earn points by scanning. This is a tough morning. I've been up since 5 already. And the more you scan, the more points, and then you generate the rewards, which then can be redeemed for prizes, merchandise, or discounts. It is a major area of opportunity for us, and we're continuing to pursue it both in sports, but outside of sports, the world of retail as well.
Okay. I want to jump to a couple of questions we didn't have a chance to answer in the last live stream. Chernenko was asking, are we going to see more of these scavenger hunt agreements? I think the scavenger hunt stuff seems very popular.
It is, and we're going to take scavenger hunt two ways. One is, as you see opening up of COVID, I think you'll start seeing those occur more and more now. It obviously was on a hiatus with everything going on, but you're looking at malls, property owners, teams looking to engage fans and consumers in certain locations to get these activations. So you're going to start seeing that occur again. We've enhanced the scavenger hunt actually since this past winter as well. So we've added a number of features, but also think of scavenger hunt on the screen. As you're live streaming, you can collect items on the stream. And as you do it, if you complete it, you're rewarded with whether it be coupons, discounts, or special experiences. So think of scavenger hunts both to do digitally on screen during live stream of events and certain performances, but also to be done in the physical world. And we'll continue to do those as we go forward. And certainly the one thing we got to always say is we can grade scavenger hunts anywhere in the world within an hour, and we are the only platform in the world that could do it. There is not another one today, and we don't expect anyone to catch up to us for quite a while.
Okay, I got kind of two related questions. I think Viofis was asking, are there any plans to talk to Tanger Outlets? I think Tanger Outlets has those big malls about an AR contract, or are you talking to any of the big?
We won't talk specific. I mean, obviously, we've got a number of advisors. We do have a number of resellers, both in Canada and the US. They're out going around. It obviously makes a lot of sense to draw people to those areas, have them, whether do scavenger hunts for coupons, prizes, sweepstakes, engage people safely. Certainly with COVID-19, it's a key. As we see, this is going to continue for a while with COVID. So that is a great engagement activation opportunity in people's hands. And it's something that is safe and healthy and can be done today and easy to do in low cost. So yeah, we'll see that. I can't name specific places, but we are talking to a number of large retailers and malls as well.
Okay. We got a very interesting question here from Ellis. He was asking, how do you plan on keeping investors confident and happy if deals aren't coming as fast as originally thought?
Oh, so yes, we're IBM. We should be closing deals on a daily basis. What's funny is the retail investor wants to see news daily, if not twice a day. And we are, and there are companies that focus on promoting, putting out news, whether it's major, maybe it's not. They put out a lot of press releases. We have never been one to do that. We like to focus on putting out news that's newsworthy, that's not just going to sit there and be fluff, that has no real meat behind it. I mean, recently, if you look at our press releases, you had Valencia, you had the NFL alumni with the academy, you had Wave, so we are trying to focus on real meaty press releases that demonstrate progress in the market, but we're still a startup. AR, as much as it's growing, is still a startup and growing mainstream as we speak. We still have been talking to a lot of major brands, teams, organizations, now both overseas as well here. We are confident we'll continue, and we'll put out news as it occurs. Have we signed a few resellers? Yes, we have. We have not put those out as news items. But investors have to ultimately look and decide, do you believe AR has a future in the market? Do you believe AR is going to be mainstream? Does ImagineAR, with this patent portfolio, which we feel has enormous value, and our platform and technology and recent clients, look like we will be a player as this market grows? If you do, and you're looking at a pure play AR, the reason I keep saying pure play is, Jack, let's look back to the old days with Instagram. I believe Instagram was 4 people and got acquired for $1 billion by Facebook. I'm not saying we're Instagram, but what I'm saying, if the tech is there, the platform works, the patents are there, and the proven model is existing, your potential for value starts coming in is where the next organization might have the opportunity to use it. I saw a flash someone say, you're looking at NASDAQ. The board of directors is always going to look at the best way to get shareholder value and build it as we go forward. We've been at this for 3 years. It's been a grind. It's not easy, but certainly you can see that we're announcing news much quicker now than we ever did. We're a lot more optimistic. I did say we're going global, and we didn't go out with starting out with a low minor league team. When we went global, we went with one of the top soccer football teams in the world, Valencia. That's a pretty big hit. And the reason they selected us is by our proven track record and by reviewing our tech and seeing that we could deliver to their 7 million fans around the world. So you have to have confidence that if it's good enough for them, we're still, I believe, significantly undervalued for what we have as a pure play with a tremendous platform. Microsoft hand selected us. We were asked to come in and become a partner of theirs. We were fast tracked for it. There's a reason for that. So there should be some confidence from investors seeing all this news and saying, you know what, this is not a lot in terms of stock price. It might have a lot of runway to go. We don't predict stock price, but we believe we're going to continue to close deals. Very optimistic, not only in sports, which obviously is a major area for us, but in other verticals as we continue.
Okay. Alan, one of the things I wanted to ask about is, we're already in October now. There's been talk about the Apple Glass, the AR glasses that they've been developing, and this is supposed to be like the biggest thing since the iPhone. There were rumors that it was going to come out in October, like in the summer. There were some rumors floating around. There was like product shots, there was like videos online. There's a lot of stuff that's been kind of leaking out, and now they're saying it might be in early next year. So in about within 6 to 9 months is when they're expecting it. So my question is, when Apple does launch the glasses, when Samsung, Facebook, when everybody launches the AR glasses, what kind of impact will that have on ImagineAR's business? And also, I'm sure a lot of companies are aware that this is coming. The companies that you're talking to, sports teams, all that. So how is that affecting your business?
Good question. So let's start where we are. As I've mentioned, there's over 5 billion mobile phones today up and operating globally. That is an enormous target market, and that will continue to be a target market for AR for years to come. So even when Apple glasses come out and Facebook promised their glasses, I think by the end of the year, those are going to be starting to go out as intro, adopters. You're going to have the Silicon Valley people, the New York, the people from Brooklyn, the hipsters. Remember Google Glass? People thought they were cool. You're going to have that initially. The mobile phone is here. It's big. It's a great target. And as it grows, we can support that platform and that environment. AR, again, is very direct in file formats, how we have to support it and deliver and publish that. And that's why we believe ImagineARstudio.com is going to become an effective piece of that marketplace as it grows. So as an ecosystem, ImagineAR Studio is looking to be a publishing area where it doesn't matter if you're publishing for Apple glasses, for Facebook, it won't matter. We will support all those formats, all those capabilities, and allow people, small businesses, consumers, as Nazar asked previously, to create AR experiences, plant them anywhere in the world, and then have them engage whatever the hardware is. We are focused on software, not on the hardware, and the ability to support all those different file formats. And every one of those firms are trying to come out with a specific standard of file format. There's an association group called Kronos, Khronos. They came out with their format. And of course, Jack, Apple has their own format, but we're already in the midst of supporting their new format. That's already built into our SDK. We're already supporting it. So we are positioning ourselves as Apple Glass and all goes out. But I think with glasses, you're still going to be looking, minimally 2 to 3 years away. I don't think you're going to see that quick of an adoption. It's exciting, cool, forward direction. But mobile phones, 5 billion. Let's hit the big market. Let's hit the global market right now, and let's get the AR activations and educate and get people excited about it. And then it'll transition to glasses as we go forward.
Okay, Alan, I got a few more questions before we wrap up. So one thing we haven't really talked about, I haven't asked you before, was you've added some new team members. You have, what was it, Chris Dill, Mike Anderson, that you've added, in the last couple of months. What's their role in the company, going forward? How are they, moving ImagineAR forward?
The advisor opportunity is not just for figurehead. It is not just to put a name on the website. And many companies do it. I've been around long enough. We don't do that. We look at advisors as truly engaged with the company. They are compensated in stock options and commission 99% of the time. That's pretty much it. Sometimes there'll be a little bit of a monthly stipend to assist with expenses, but their goal is to build out our market. I was just on with Mike Anderson over the UK. We speak pretty regularly. He has a tremendous network in the UK in different areas, including sports, of course, but other areas where he's going out marketing to help build out that marketplace. Chris Dill, former Portland Trailblazer CIO. He truly is considered one of the top guys in sports tech in the United States. He's highly respected. And to have him come in and put his name on ImagineAR is an enormous, enormous benefit to us. And he's already walking in opportunities as we speak and new demo opportunities. So they're operating in their areas of expertise, opening up new account opportunities and revenue streams. And that's what's exciting, to have these types of advisors who are not just looking to be here and just show up and say, I'm part of a company, but actively selling and marketing with no fixed cost against them. We watch our bottom line very close. We manage our costs very closely. We watch our cash flow, and still our monthly burn rate. And as I think I said previously, probably 60% of our monthly burn is purely going into tech. It's to build out 2.0 cloud. It's to build out the SDK. It's to build out ImagineAR app and white labels. That's where we're doing our focus on in terms of burn rate. And the advisors are terrific. They're really working to bring new leads and opportunities. And you're going to see the fruits of those labors sooner than later.
Okay. Two more questions. This one people have been asking is Sheldon still involved in ImagineAR?
He's still involved. I still speak to him at length multiple times a week for sure. He did bring us Loop. He's bringing other opportunities as well to the company, certainly with his relationships in Canada in the world of e-gaming, esports, and some other areas. He has certainly been instrumental in providing a number of introductions as well. And as we go forward, he's still very involved. We talk regularly, if not daily, but multiple times on the weekly basis. He also helps in terms of some of the strategic opportunities we're involved with. So absolutely still very involved, still very committed, and still, part of the ImagineAR executive team and board of directors.
Okay, so Al, two questions. One is what can we expect? What kind of news flow do you have that investors can look forward to over the next, let's just call it next 3 months, taking us into the end of the year? What can people keep an eye on?
I think you're starting to see a pickup, Jack, in terms of the news flow. You see some big names coming out. I think you'll expect to see more, wins potentially in the world of sports, both here in North America as well as overseas. I do expect some expansion into the music entertainment world, and potentially some surprise vertical markets that people are aware of where AR would really apply, but maybe we haven't announced one in that vertical. So it's starting to pick up. And part of the reason is decision makers, again, as I said last time, they have been previously waiting and sitting to decide what to do. Well, now we're getting into the third, fourth quarter. Businesses can't wait any longer. COVID-19 is part of our daily lives, and it looks like it'll continue through 2021, mid-year at least, if not longer. And now decisions are being made how to engage your consumers, your fans, your target audience, and drive revenue. And mobile AR is absolutely have a home in there right now. It's something that a lot of companies are aware of, they're considering. And I think you're going to start seeing a stream of news targeting those areas. And again, we've been pretty optimistic. I think I said even early in the year, expect from September forward to really start to be the area we're focused on, where you're going to start to see deal flow. And I think we've hit it. I think, big wins.
Yeah, no, there's definitely the news flow is really picking up. I mean, Valencia is a major team. I mean, maybe, not in America, but it's, that's sort of like
we're talking Korea already. I mean, the conversations are pretty significant, Jack. You're right. And soccer, football is enormous, but they, what's great about them also is they want to be the keystone account. They want to be the ones with us to bring out the tech, introduce other organizations, other leagues, other relationships. They have, obviously a wonderful reputation of being their native.
Alan, for the Americans in the audience, like, they don't follow soccer. What Valencia is? Are they the equivalent of like the, I don't know, San Francisco 49ers, the
Dallas Cowboys versus
Dallas Cowboys?
And compared to how the Giants and Jets are playing, being from New York, we don't even want to put them in there. But when you look at Spain, you have Madrid, you have Barcelona, and then you have Valencia. So it's certainly, not at the Real Madrid level, but it's pretty enormous, significant, and highly respected. So you've got one of the top 3 teams in all of Spain around there. So it's pretty cool to have them recognize us. And, it's funny is we've been out talking in Canada to junior leagues. We've talking to minor leagues. We've been out talking to a lot of teams. It's funny enough, the Valencia deal happened really quick. And part of that is exciting is they knew they had to do something. So, and my Spanish is not that good. I think the last time I took Spanish was many decades ago. So it was great to have them recognize from the technology what we could deliver and want to be partners with us for the next 2 years. They're going to have stadium nights with ImagineAR signs all over the stadium. I mean, we have the box. They gave us the box for a season. So, Jack, we can line up a time. You can kind of fly over with us on your private jet. As the Wall Street Reporter jet, I'm aware, is.
We're working on it. Yeah, we got to get.
We'll fly out to a game, and you'll be able to go there.
Perfect. Well, Al, last question, which is our favorite here, is top 3 reasons why investors should consider ImagineAR stock today.
Well, I think we've gone through it. We are the only pure play, and people sit there and go, "Oh, we want revenue." Well, you know what? I'm not going to do revenue for the hell of sake of revenue and call it revenue, because it's not AR revenue. We've got accounting. We follow standard practices. We are an AR as a service company. We're always going to be focused on that revenue. So as the value of the company continues to grow, similar to what's done with SaaS models like Salesforce, we're going to focus on that. So if you want to be in a pure play, you believe that Valencia, the NFL alumni, Wave, slap it on with Troy Aikman, Johnny Damon, they believe that we have something of significance. They want to partner with us long term. Those deals are long term. They're putting their reputations, their personalities on our technology and our mobile app. I think that should give some assurances and comfort to investors. Being a Microsoft certified partner that we were pursued and we became fast track one of the partners, and we're out there running, gives you confirmation of our technology. And certainly, as you see the advisors that are putting their name on our company, Chris Dill, he's approached by a lot of companies. I don't know if anyone in the audience knows, but he is a moderator at conferences around the world. He's highly respected. He did not have to come in and say, "Oh, I need to do something. Let me put it with ImagineAR." He was willing, after a year and a half of talking, to put his name on us and take us to his relationships and partners. Mike Anderson, again, ran the news, very significant person. He put his name on it as well. So you've got very senior people willing to put their reputation name on ImagineAR and work closely with us to build out our audience as we go forward. This is not a sprint, right? It's a marathon, and it's a journey that happens step by step. It's a grind. There may be weeks that you may not have news. There may be other weeks you will. But at the end of the day, if you believe in the AR market and the growth, we are the only one available around the world. You're seeing stock activity pick up in Frankfurt recently, the stock trading, which is surprising. You're seeing our volume is beyond so many other companies. Forget in the aerospace. I mean, it's ridiculous, the volume. So we're getting a lot of interest, and I think you're going to start seeing the building blocks paying off in the years of hard work by our team, by our advisors, by our investors, with Sheldon involved as well, that you're going to start seeing the rewards coming out through 2020 and ahead.
Okay. Alan, on that note, I want to thank you, and hopefully we're going to have you back in a couple of weeks with more great news.
I look forward to it. I think we can potentially book it. Thank you for the time. Investors, thank you very much. I appreciate it. We have great investors. I will reach out to one. I gave a shout out on the last one, but certainly there's an actor, Lachlan Monroe. He posts all the time. He reposts. He's an investor of the company. He's been around us for years. He's in Riverdale on Netflix. He's in one of my kids' favorite movies of all time, White Chicks. He's done 300 movies, scary movies. I like to thank him personally for always putting out tweets of ours and getting us recognized. And I appreciate all the kind notes from the investors. And most importantly, I was totally shocked how many investors in the last 48 hours appreciated my orange shirt that I got from Valencia. I've never gotten so many comments, Jack, on purely the color orange is the new black or something. So thank you very much. And I appreciate it. And also shout out to Fabio in Toronto. Can't do anything here. Take care. Bye.
Okay, thank you, everybody. We're going to bring on our next presenter, FansUnite. Darius, you there?
I'm here. How are you?
Okay, fantastic. All right, you sound good. I hear you. I see you. All right. Let me just put up your banner on the screen. FansUnite. Okay. Here we go. Let me just put this here at the bottom. Okay. Hey, everybody, thank you for standing by. You're definitely going to want to hear what we have for you next with FansUnite, our next super stock company spotlight. Fans has been, they actually debuted with us just a couple of weeks ago. The company's had some, pretty significant news, and we've seen kind of a building here. It actually ties in very well to our previous presenter, which is involved with the live sports business, fan engagement, and Fans is actually is on the other side of that, where people can actually bet on sports. You enable betting on sports and also esports, which is now becoming even bigger than actual sports itself. So Darius, with that said, we got a lot of new people in the audience here. So can you kind of maybe give us a quick snapshot of exactly what does, FansUnite do?
Yeah, thanks for having me, Jack. I think it's a good segue from the last company with fan engagement, as kind of we take it on another level, which is sports.
It's a more committed level of an engagement, right? When somebody puts on a bet.
Exactly. But yeah, so we're a sports betting company. We've been around for 7-8 years. We went public just this year in May. We've done a couple of acquisitions already, so we've been very busy in the last 6 months. We're really focused on the technology side of sports betting. So we're the technology behind the sports books. We have our own business-to-consumer brands, direct-to-consumer brands that we've launched, and then our big blue skies where we white label or license our technology out to other sports books who want to take bets on sports, or most recently esports as well.
Okay, so one of the really interesting news items you had a couple of weeks ago was that you white label the technology, but you also operate your own online casinos, sports books, etc. Like McBookie, which is I guess a Scottish company you have. They announced that massive increase in revenues once live sports started. Can you talk a little bit about McBookie and what you're doing in that area?
Yeah, we're super excited about McBookie. So that's a company we acquired as part of our go public strategy. So we acquired them in March, went public in May, and just their growth in the last 6 months has really validated our acquisition of McBookie. So just year over year, from this time last year to this time this year, we've seen huge gains, about 400% gains. So the return of sports was huge for us. Return of all the major soccer leagues now. Premier League's back, Scottish soccer's back. So it's been very, very good. And we're continuing to really grow organically. We're now getting ready to actually put some fuel on the fire, put some money behind McBookie and really take it to the next level. So we're excited about the next 12 months for McBookie.
Okay. And what's actually, to break it down, what percentage of your business is running your own, direct to consumer, the esports betting, sports betting, versus selling the technology solution to casinos and other operators?
Yeah, so right now we have 4 B2C brands live. Those are our own that we run, that we market, and take the bets on those. That's McBookie, Esports Bets, Esports Pools, and Vamos, which is our Latin American brand. So those are our B2C brands. Those platforms have about 350 million of betting volume since inception, over 300,000 registered members. So that's our B2C brand. We're focused on growing those right now, mostly McBookie and Vamos. And then on the B2B side, we're white labeling our technology out. We have 4 contracts signed. We have 2 of those live up and running right now. The other 2 hopefully going live this year as well. And there's a lot of growth opportunity there. That's been all completely inbound traffic for us. We were just nominated as one of the top esports suppliers of the year, which was exciting for us. So we're getting a lot more inbound. We want to get as many clients as we can licensing our technology. That's really the blue sky for us here at FansUnite.
And one of the interesting things is now you're entering the U.S. market, which is massive opportunity. Sports betting is that's going to be you've had a number of huge stocks. I mean, or massive runs and companies like Penn Gaming. You have DraftKings. They're moving on the excitement with sports betting in the U.S. Can you talk a little bit about your U.S. expansion? And I think the focus is going to be on the esports side, right?
Yeah, that's correct. So, speaking to our investors over the course of last year, we've told them, we don't plan on going into the U.S. market as an operator. It's very time consuming, it's expensive, you're going against really deep pockets. As a technology company, we had this opportunity to partner with a company called GameCode to get into the U.S. market. So our entrance in the U.S. market got accelerated by, probably at least a year and a few $1 million. But we're coming into that partnership as the technology provider. So we are going to be the back-end solution essentially for esports with a couple other partners to actually launch esports sportsbooks in the U.S. in regulated and licensed markets.
Okay, and again, we do have a lot of new people in the audience, and they may not really be familiar with esports, the actual betting on esports. So can you give us a snapshot of what is esports all about, and how big is the market for people betting on these esports teams, on video games, all that stuff?
Yeah, just to give a bit of background on that, we were really focused on the sports betting side, traditional sports, but we knew we always wanted to get into esports, and that's why we did this merger with Ascot a couple months ago, which has been amazing for us, just to bring in the technology, the team, the platforms. And so esports is really betting on video games, professional video games, games like Counter-Strike, League of Legends, Dota, Fortnite. It's that opportunity, and it's such a massive, massive space right now because it's a global sport. It's a younger demographic. There's huge, huge viewership. Now more and more people are betting on it. It's now one of the top betting sports in the world, and you're seeing it continue to grow a lot faster than all the other traditional sports. So it's a huge opportunity for us right now, and we're still at the beginning stages of esports as people really start to understand what esports actually is.
I think we talked about it before. Like, you're entering the U.S. market, sort of like enabling these, casino sports books, to offer esports betting. And, like one of the things we've seen, with casinos now, like in markets like Vegas is, they're all moved away from, again, they're all trying to go after the younger demographic, right? They want to go after people who are in their 30s, let's say 20s, 30s, who are going to spend money because they're, where they're making the real money now, or before COVID was, the nightclubs. That was like probably the biggest, revenue generator. It's no more of these live shows. It's really these nightclubs, and the people who are going to these clubs are, they're not 60 or 70 years old. They're people in their 20s who follow esports. So that that really plays well. How big is the esports betting market worldwide right now? Like, what are the numbers you're seeing? I've seen different numbers. Yeah,
there's lots of different kind of estimates out there. So we try not to put any concrete numbers, but we're seeing reports of about $17 billion on the esports betting side. Esports in general as an industry is obviously massive, and the betting aspect of esports is the #1 revenue generator in the industry right now.
Okay. And it's relatively new. How long has the betting side been around? How long have people been actually, betting on these esports teams and all that stuff?
Yeah, it's been around for some time, just this decade, really. But we're pioneers in the space. Ascot was really one of the first esports betting companies out there. They were first esports dedicated sports betting company to get licensed in the Isle of Man. So that shows you kind of how early we were in the industry. So we've been in the space for 7-8 years now, and growing with it. So we've been there since kind of the beginning of it.
Okay, and there's other there's other public companies kind of in the esports space, and I think investors, some investors kind of wonder, like, what's the difference between everybody out there, like, so, or another, let's say esports, maybe there might be other betting companies out there that are private. Like, what separates fans from the competition? What do you do differently?
Yeah, I think it's really our technology, right? So we've been around for 7-8 years. We've put a lot of time, a lot of money, over $10 million into our technology, which is great because we've been able to de-risk, our investment now because we've put so much money in, and we now have state-of-the-art technology. And one thing we've been trying to do here as a company is, we don't want to just be an esports, betting company. We want to give our clients a full suite of iGaming platforms. So you come to us, we're going to be able to set you up on a sports book, not just for traditional sports betting, but esports, as well as hopefully virtual sports and then casino as well. So we're giving that full package, give you 0 exit points to actually leave, by being able to provide you all the technology you need to keep your clients entertained.
Okay, yeah. So I think so that's an interesting point, and so basically, you offer sort of like a turnkey solution for somebody who's running, direct to consumer, one of these online casinos or a sportsbook, whatever it is. That now they have, they have everything. They have the live sports that when live sports are on. You got the esports. They have these different games, kind of like what the casino thing that you have is what, like these. What do they call it? Random number What exact? Can you explain that again?
Yeah. So we have casino games. So we've integrated over 6,000 casino games into our platforms that we can then give to our customers. But we've also been developing in-house casino games. So we've developed 2 already, the random number generator esports style casino games. We've built 2 of those. Those are now live, and we're working on our next 2 right now as well. So not only are we bringing in partners for the casino, we're actually building our own internal games, which will start to be distributed through other casinos as well.
Okay, yeah, because and last time you actually did a demo of some of them. They're pretty interesting. It's sort of like, I guess, like a slot machine in a way. It works basically like a slot machine, except it's a video game.
It's a little bit more interactive. So the old slot machines of kind of spinning the fruit wheels, that's kind of for this, like you said, the 60, 70, 80-year-olds. We're kind of building a more interactive game. So as an example, one of our games is called Crash Ice. It's a game where you go you're the bank robber, you go into a vault. There's a multiplier, and you're essentially stealing cash from the bank vault, and your money is going up and going up and going up. But at any time, completely randomly, the cops might show up and you lose everything in your bag and you get arrested. Or you can just leave at some point, you take your money and go and you get to keep that. So it's a little bit more interactive. People are kind of engaged. It's fun type games, esports style. So it's been getting some really, really good traction right now. So we're excited about the games we're building.
Interesting. Now, one thing that I think would be interesting to talk about is, can you talk about like some of the comps in the space? Because, you know, like right now, the company is kind of like in the early stage. You have revenues. You know, we'll talk about the revenues, but really, you know, the main asset really is the technology, kind of the, you know, the traction that you have. What are some of the valuations of peer groups in the space right now, like esports and sports betting? Can you talk about those?
Yeah, like you mentioned, Jack, I think we're looking at some of those massive companies in the US, and obviously we're not at those levels yet, but it kind of shows you where we hope we can get to one day. You're looking at DraftKings that went public earlier this year. Huge, you know, story, multi-billion-dollar market cap right now. And then you're looking at Penn National Gaming. They went and bought Barstool Sports for their database of users to create, you know, the Barstool Sportsbooks as well. You know, another multi-billion-dollar company. There's other companies like GAN in the US is also focused on the technology side. So that's a really good comparable to us, we think. And then you look at kind of consolidators out there like GVC in Europe that have been acquiring assets. And we're on that path as well. We've done 2 acquisitions since we've been public. So like you said, you know, those are huge market caps, but I think we're a much lower entry point right now. But our technology is state of the art. So I think we have a lot of room to grow.
Okay, so the market cap right now, the stock is what is it? I'm looking at the US. The US about 18 cents US.
Yeah, 35 million market cap.
Yeah, so the valuation is seems pretty reasonable. You know, based on the the technology that you have. So that's kind of interesting. Can you talk a little bit more about some of the traction you have? Talk about some of the metrics in terms of revenues and other key metrics that would be of interest to investors.
Yeah, so just some of those highlights I pointed to earlier. On our B2C platforms, we have over 300,000 registered members. That's growing every single day. We have 4 B2C platforms live. We're really just starting marketing on 2 of those. Everything we've done so far has been completely organic, so we're excited about that. We're actually going to put some resources behind those to really grow and scale them. We want to double those revenues on those platforms in the next 12 months. On the B2B side, again, 4 clients signed, completely inbound. Some of those came on after we got nominated for the Esports Supplier of the Year through the EGR Award, which was awesome. 2 of those are live, up and running right now. We're going to get those other 2 live pretty soon here. And then we're also going to be focusing on more acquisitions down the road to bring in some more technology, bring in some more revenue. We're on pace to double revenue from 2019, so we're excited about that. I think it's going to be even a bigger year for us next year.
Okay, so revenues are exploding. One thing I actually thought about is, in your business there is a there's a cost to acquiring a customer, right? There's a customer acquisition cost.
Yeah.
Like, what is a typical cost? Like, what is a customer worth?
You see huge costs of customers, especially when you looked at the U.S. market, like FanDuel and DraftKings, and they were competing against each other. Spending $300, $400, $500 to get a customer,
okay.
And you hope the lifetime value would be a lot higher. So we decided not to play that game. We haven't spent a lot of money acquiring customers. Our cost of acquisition, especially on McBookie, is so low. I think it's around $18 a customer.
Oh, wow.
Organic. So that's why we're excited about the potential growth of McBookies, because what they've been able to do over the last few years has been completely organic with low cost of acquisition, with a lot higher lifetime value on these customers. So now we're ready to put some fuel on the fire there.
So what's interesting is you mentioned that the customer acquisition cost for like was it the DraftKings Penn is $400 or $500. You said 300,000 users. The market cap is 35 million. Let's say 30 million US.
Sure.
So that's about $100. Did I do my math correctly? Is that $100 a user?
Yeah, I guess if we just look at users, that database is worth a lot to us, and we're getting ready to start
the database. So in other words, that database might be worth more than the company. I mean, so it's in theory it's the stock is undervalued based on that.
Yeah, we're going to start monetizing on that user base. The partnership with GameCode again to the U.S. market, that's going to be big for us. We're looking to do some affiliate stuff in the U.S. as well. because you get paid to send every user to a regulated and licensed sportsbook. So we want to be able to start sending our traffic to regulated licensed sportsbooks. So we're going to be looking at that moving forward as well.
Okay. Let's actually, we got a couple of audience questions. We're talking about users. So we got audience questions coming in. We have Mohammed is asking, what's the percentage of institutional or insider ownership right now?
Yeah, I'll get those exact numbers for you, but institutional side, we're not very heavy on institutional. It's been mostly retail. We've raised money, over the last 5 or 6 years, both through FansUnite and both through Ascot. On the insider side, we've actually also locked up all our stock above and beyond the CSE escrow. All founders overall not just went into CSE escrows, they went into voluntary lockups to show the market that this is a long-term play for us. We believe in what we're doing. So as insiders and founders, we have zero stock coming down in the first year to show the market our vision here and our long-term strategy.
Okay, I think Mohammed is asking a follow-up question. If I understand, how are you doing in revenue growth for the quarter? I guess the current quarter.
Yeah, Q2 was one of our strongest quarters, and then we put a press release out about McBookie a couple of weeks ago about the growth there and the revenue there. So it's been a very, very strong quarter. As mentioned, we've on pace to double revenue from 2019, and we think we can more than double that again in 2021.
Okay, so those are some pretty significant growth numbers. Yeah, I'm just curious in terms of anybody who's looking at the stock, kind of looking at it as an investor in terms of the risk reward ratio, the base, the customer base. That's something which I didn't really think about before. You have these 300,000 users, which is that's something that's would be worth money to potentially to, let's say, a strategic buyer. I mean, like, what would fans be worth, let's say, to a company like a let's say it's not Penn, but another player in the space? Would it be more than 35 million?
Yeah, I would tell you right now, we wouldn't sell the company for 35 million. So, we believe in what we're doing. We think we have a lot of upside here. We think we're undervalued, and we think we've de-risked our investors quite a bit with the technology we've built, with the validation we have on our white label and licensing out our technology. So, yeah, I would say we are undervalued. We think we're a good opportunity for where we're at right now.
No, I mean it's interesting because the esports space is very hot, and the stock is seems to be very undervalued at these levels. You have this massive revenue growth, triple-digit revenue growth happening here, massive market opportunity. So it's something definitely worthwhile keeping an eye on. So Darius, what kind of in the coming couple of months, what kind of news flow do you have coming out that investors can keep an eye on?
Right. Yeah, we've been heads down, a lot, building, of course, the technology and then getting partnerships. So, we've shown our growth with McBookie. We showed our entrance into the U.S. market with GameCo. So moving forward, we want to extend kind of those partnerships, in the U.S. market, start building some relationships, start announcing some deals in the U.S. With clients coming on board on our platform. So that's something we're focused on in business development right now and bringing new clients on. And then our team is also focused on building and growing McBookie and Vamos. So we're definitely going to update the market on the growth on those two platforms. And then we're always looking at potential deals and acquisitions. So we're getting a lot of inbound. Since we've done 2 already in the first 6 months, a lot of inbound traffic has come up, potential opportunities there to bring in more revenue, more cash flow, bigger database of users, etc. So we're always exploring opportunities there as well.
Okay. Let's see. We have any questions from the audience? No. Okay. So Darius, last question I have is what top reasons why investors should consider FansUnite, in your opinion?
Yeah, I got a whole list of those, but I think it's the top ones. We're looking at a massive market. We keep talking about it, multi-billion-dollar, potentially multi-trillion-dollar industry. And you're looking at some of these huge growth companies, like we mentioned, DraftKings and GAN, and a whole bunch of others in the space. I think we're just getting started, but our technology, we believe, is world class. We've spent over $10 million building it. We have top-notch, engineering teams. And it's not like it's just been built and now we're going to go see if it works. It's been validated. We have customers on the platform licensing it. Hundreds of thousands of dollars of bets going through. So we're excited about our technology. We think we're de-risked quite a bit. And I think compared to a lot of our peers, we are such a lower entry point with a lot more room to grow than a lot of those. So I think that's probably the top reason. And then you look at our team, it's world class. For a company our size, you don't typically get, the board members that we have, the management team that we have. Our board members are world-renowned guys in the gaming space in the U.S. market.
Yeah, we can talk about that. So maybe bring up who are maybe you could tell our audience about some of your board members in the team right now.
Yeah, so myself, I'm on the board. I'm the president of FansUnite here, and Scott, our CEO, is on the board as well. We've both been in the space for close to a decade. A lot of experience in the gaming space, starting multiple companies. And then the 3 guys we brought on board, we brought on Harish, who was the ex-president of Paddy Power Betfair for Asia Pacific, which again is the largest gaming company in the world with their most recent merger with Flutter and the Stars Group. So huge gaming guy. A lot of background in financing, M&A, launching platforms in jurisdictions, government relationships. So he's been a tremendous asset for us. And then we brought on 2 new board members recently. Chris Grove is, again, a huge heavyweight in the U.S. market. You'll see him online on CNBC, speaking a lot about the regulatory market in the U.S. He has tremendous access to deal flow. Extremely bright guy, and we're pretty fortunate to have someone like that on our board. And then we also brought in another industry heavyweight, which is James Keane, who's one of the first early founders of Paradise Poker, which later sold. So he's been in the space for decades as well. So to have guys like that on a company of our size is kind of another validation point of what we're trying to accomplish here, as they believe in what we're trying to do. These guys don't sit on a lot of boards, right? So it's exciting for us.
So something you just brought up, which I haven't asked you about in the past, was you mentioned this access to deal flow. Now you had this merger with Ascot. Are you looking at other M&A opportunities going forward? Is that something that's on your radar right now?
Yeah, it's on our radar. We've done 2 acquisitions now this year already. It's on our radar for sure. And we're kind of the advisors, the board, and our team. Like you said, we're getting tremendous access to deal flow. So we're looking at strategic opportunities. We want to be able to bring in more revenue. We want to be able to bring in opportunities where we think we can really add value, whether that's saving them money by using our technology, or really growing and scaling those businesses using our team and our resources. So we're always looking for opportunities to bring more technology in-house, more offerings for our full iGaming suite, more revenue, more cash flow, and enter into new markets. So yeah, we're always looking.
Okay, what's the value in this business? Which things have value? Is it like the operating technology, or is it like the creative side, like the actual games themselves? Like which things are kind of considered valuable in your space?
Yeah, all of the above. So, our database of users is valuable. Our technology is our biggest asset, being able to license that out. That's where we're going to see tremendous amount of growth, because every client we bring on board, we charge them monthly fixed fees, but then we also do revenue shares with them. So as they grow, we grow with them. When we have a couple already on board, once we get to 5 to 10 to 50, you're going to really start to see that revenue compound. So that's what we're excited about. And you're seeing a lot of companies in the space, even DraftKings, they've finally made a decision that technology was their biggest cost driver. So they need to bring technology in-house. So they went out and bought SB Tech, which is a sports betting supplier for, I think, about $700 million US. So a lot of these companies are bringing technology in-house. Well, Scott and I have maintained since the very start, we're always going to have technology in-house. So I think we have a huge opportunity now to go out there and showcase our technology to these huge companies where their technology is their biggest cost driver.
Yeah, it's funny. In DraftKings, on their last conference call, the CEO was very, very bullish on esports.
He was.
I mean, I think they see esports as being one of their biggest categories, so maybe even bigger than actual sports. So there's a lot going on in this industry, and we're kind of in the early days here. So let's see. We don't have. I think we're out of questions. So I think. We got a lot to look forward to in the coming weeks. Darius, I want to thank you again for sharing your time with us, and we'll catch up with you on the next live stream. Thank you, everybody, for joining us today in the live stream.
Thanks, Jack.
Thank you, everybody, again.